Hello and welcome to the day ahead. It is Tuesday, January the 20th. I'm Andrew Gagan. Well, the local market is set for a negative start with ASX futures off by around 1/3%. Global stocks have fallen while investors have sought safe haven assets, sending precious metals to new record highs after President Trump threatened additional tariffs on European countries that oppose his planned takeover of Greenland. US markets were closed for the Martin Luther King holiday, although S&P 500 and Nasdaq futures both dropped more than 1.2%. European shares logged their biggest fall in 2 months, the Stock 600 index falling 1.2%. Those countries targeted by President Trump with further tariffs, including Denmark, France, Germany and the UK, saw the largest falls, with the blue chip indices in Frankfurt and Paris falling, along with Copenhagen's index, which was down 2.7%. Luxury, automobile and tech stocks were among the biggest losers, with Burberry and Watches of Switzerland leading the losses. A gauge of Eurozone equity volatility jumped to its highest since November, and precious metal miners surged more than 3% as gold and silver hit record highs amid a flight to safety. Elsewhere, insurer Beazley soared 43% to a record after Zurich Insurance made a takeover offer for the British specialty insurer. And pharmaceuticals and ag group Bayer rose after the US Supreme Court agreed to hear its bid to limit lawsuits claiming that its Roundup weed killer caused cancer. Well, President Trump's renewed tariff threats against European allies have revived talks of the Sell America trade. European countries are the United States' biggest creditor, owning $8 trillion worth of equities and bonds, almost twice as much as the rest of the world combined, according to Deutsche Bank. The European Union has condemned the tariff threats as blackmail, with France proposing economic countermeasures, such as its anti-coercion instrument, which could limit US access to public tenders, investments or banking activity, or restrict trade and services. Well, the International Monetary Fund has revised its 2026 global growth forecast as businesses and economies adapt to US tariffs that have eased in recent months, and a continued AI investment boom that has fueled asset wealth and expectations of productivity gains. In its World Economic Outlook update, it's forecast global GDP growth of 3.3% in 2026. The IMF estimated US growth for the year at 2.4%, China's growth estimated to reach 4.5%, down from the 5% it just reported for 2025. And Australia's 2026 growth is forecast at 2.1%, while the IMF raised concerns about stubbornly high inflation here and urged the RBA to take a cautious approach to setting interest rates. The US Treasury physical market was closed, but futures implied 10-year yields rose 2 basis points. Australian 3-year government bond yields rose to 4.19%, the 10-year at 4.8%. The US dollar fell on concerns that global investors could exit US assets in response to the US-EU trade war. The Aussie is trading at 67.1 US cents. Oil prices have steadied as the prospects of a US attack on Iran wane, with trading activity muted due to the US national holiday. Brent crude futures at $64 a barrel. Gold and silver have hit new record highs, driven by a flight to safety amid escalating trade tensions between the US and Europe. Spot gold jumping more than 1.5% to around $4,670 an ounce. And spot silver climbing close to 4.5% to $94 an ounce. Copper rose 1.3%, iron ore fell 2% to 105 US a tonne, and risk-off sentiment has seen Bitcoin fall to 93,000 US dollars. Ahead today, corporate-wise, we get quarterly results from BHP and Hub24. That is your day ahead. See you again tomorrow.